Good morning, everyone, and a very warm welcome on this cold, rainy day. Jeremy, you know how to pick them, hey? At the Johannesburg Stock Exchange, which is also the home of some of the most esteemed and beloved brands in South Africa. My name is Vuyo Lee. I'm the Director of Corporate Affairs and Marketing here at the JSE, and it is such a welcome, such a pleasure to host you again on this auspicious occasion. In today's fast-paced world of constant development and advancement, perceptions shift rapidly, ideas change constantly, and the landscape of consumer behavior is in a persistent state of flux. And with this evolving landscape, with an abundance of consumer options and minimal costs associated with switching brands, only one constant holds true, and that is your brand is the single most important investment you can make in your business, as said by Steve Forbes, the editor-in-chief of Forbes magazine. Sustaining a meaningful brand plays a vital role in setting companies apart from their competitors, fostering familiarity and confidence among consumers, and conveying core beliefs and image. A brand with high equity has the power to inspire loyalty, draw in fresh clientele, and play a fundamental role in propelling a business towards prosperity and expansion. And I know that I am probably preaching to the converted here, because as some of the most compelling and distinguished brands in South Africa, your consistent dedication to upholding this core brand principle is what has earned you a spot among South Africa's top 100 valuable brands. It is in the spirit of excellence that the JSE has stood firm over the last 136 years as a world-class, future-fit financial marketplace in South Africa and amongst the top 20 global stock exchanges in the world by market capitalization. At the core of our brand lies our dedication to serving as a pivotal platform for capital raising, a dependable link between local and international markets. And we also pride ourselves as being a convener in facilitating strategic dialogue between business, government, and a broad stakeholder base for the development of South Africa. We have also cultivated our brand through constant innovation, collaboration with local and international capital market players, and also co-created with our clients. And it is with these efforts that we believe we have built a brand that has not only made a meaningful impact in South Africa, but also continues to be a trusted avenue to drive capital markets in South Africa. Much like the JSE, I believe that there are many other South African brands that are committed to cultivating meaningful brands with sustainable impact. And it is for this reason that today I'm very thrilled to witness the recognition and the dedication of the top 100 brands of South Africa. So on behalf of the JSE, I'd like to congratulate all the brands that are being honored today, and a warm thank you to all who are here to celebrate as we reveal who they are. So I wish you a great day further, and Jeremy, over to you.
Morning, everybody. I have to say that last evening at about 4 o'clock, we had 89 acceptances for today. And so thank you all for coming. I think probably 40% of the acceptances are out on the street at the moment or in the car parks or whatever. But you're all very welcome. Thank you, Vuyo, for those words. And thank you to the JSE for hosting us again. If you don't know me, I'm Jeremy Sampson. I have the privilege of being chairman of Brand Finance Africa. And this is the 15th time we've had a presentation of the top South African brands. I think some of you know a little bit about Brand Finance, and we have some very important people in this room. As Vuyo was saying, we're celebrating South Africa's top brands, and we have some very serious marketing directors in this room. So thank you all for coming and gracing us and being with us at this session. Brand Finance has been around for just over 30 years, founded by David Haig. David and I worked together with another organization before he then broke away and started Brand Finance. It was interesting that David and I worked together on the first valuation of South African breweries. And that was back in the late 90s when SAB and Graham Mackay was the CEO was looking to the future of South Africa. And remember, 30 years ago, this year we've celebrated 30 years of democracy. So that's quite a long time ago. And Graham had the vision to take SAB where he took it. Interesting, at the same time that we valued SAB, we valued Eskom. Eskom in those days, 32 years ago, was the second cheapest producer of electricity in the world. It was riding high, it was doing a fantastic job. So it's interesting to see how brands almost diverge in many ways. Now, today we're going to celebrate the top brands, but before we celebrate the top brands, and Ollie Schmitz, who's now managing director, and he's come back to us after a sabbatical, he'll take us through the top 10 by value and by strength, etc. We're talking about the theme today of headwinds. Now, just talking to some of my friends who've just come out from Cape Town the last couple of days, was it 300 kilometers an hour wind recorded, Mike was saying. And seeing someone, in fact, apologizing yesterday for not coming, showing a video of his back garden, and all you could hear was the chainsaws in Stellenbosch trying to tidy up. So we're living in strange times, but headwinds. But if any of you are sailors, you'll know that if you're sailing, headwinds are fun because you learn to tack and you zig and you zag and you enjoy it and you get on with it because headwinds are going to always be there. And the headwinds are for everyone, not just for you. So when we talk about brands, when we talk about South Africa, when we talk about the world, yes, there are headwinds out there, but hey, let's get on with it and enjoy it. Now, before we move on to the South African results, we're going to talk or listen to Mike Roscher. Mike is the Chief Commercial Officer of Brand Finance. Mike has got over 20 years experience in working with brands, largely valuing them, but not just the figure, not just the number, looking at the brand, looking what's going well, what isn't going well, using all that thinking to apply to strategy, making the brand stronger. And Mike is going to give a presentation, which he first gave at Davos at the World Economic Forum, talking about sustainability and trust. Mike also, interestingly, you might say, well, what does he know about South Africa? Well, apart from his global knowledge, because he's worked extensively around the world, he was involved in a case as an expert witness, and I know we have some lawyers in the room, for the case of SARS and MTN. And that was a judgment that was handed down only about 3 weeks ago. So Mike has some knowledge of South Africa, and I'm going to hope that technically he's on board. I'm looking up at the top there. And if we can switch over to Mike, he'll take us through his presentation. Thank you.
Hello, good morning, everyone. Unless someone waves at me or says something, I'm going to assume that the technology is working okay, and I can get started. Yes, I can see my slide is up on your screen. So very nice to be here. I'm very sorry I couldn't make it in person, but I'm sure it'll be a great event this morning, and I'm very pleased to be able to share this presentation that, as Jeremy said, was something that I covered in Davos when we launched our Global 500 study. So as you may be aware, the South Africa 100 is one of numerous studies that we publish each year, the sort of the centerpiece being the Global 500, which we launch every year at Davos. And some of the big themes that were being discussed at Davos this year were around trust. Trust was the core theme of the event, and sustainability was another key theme. So this was sort of deliberately chosen for that event as well, to be topical and relevant to the audience there. So let me kick off. I think well, some of you may well be aware of Brand Finance, and I think Jeremy's done a brief introduction, but we work with, for those who aren't so familiar, we work with brand owners and their professional advisors all around the world to answer big questions around brand value, brand performance, and brand direction. from value-based brand management, so figuring out how is the brand performing, how can we help the brand support the business and drive the business strategy even more than it is, through to analytics, so how can we improve the effectiveness of our marketing spend, how can we assess the ROI of our sponsorship investment, for example, through to strategic questions, what's the direction we should take with this brand, and then also as Jeremy was just mentioning, things like disputes, legal cases, transactions. So answering questions like, is it a good deal? What are we owed from this? How much should we be paying? So yes, we're present in a number of numerous countries around the world. The South Africa study, the Global 500 study, all of our league tables and valuations are underpinned with a huge amount of data. We invest significantly in proprietary market research all around the world. 150,000 respondents globally across 40 odd countries, 30 odd sectors, 6,000 plus brands we value, and we've been doing this now for 8 years. So we're building up a very sort of strong database of brand and financial data, and all of this really underpins what we believe are very rigorous valuations that we then publish. So in terms of the Global 500, sorry, I just want to double check because there is no, yeah, just double check. I just wanted to check that you could hear me because the screen on my side has gone blank, so I can't actually see the stage anymore. So it was slightly unnerving that I was wondering that I was speaking into an empty room, but no, there you go. Thank you very much. So yes, the Global 500 this year topped for the first time. It reached the highest ever value of $8.6 trillion. Now that represents, on average, the brand values represent 23% of the total business value of those companies. So, almost a quarter of the value of those businesses is represented by their brand values. So, this is really one key point that we always make around the fact that brands are critical business assets that should be managed, nurtured, invested in just as much as the physical assets, the tangible assets, the workforce, all of the other assets in the business. This brand is key. We also recently launched an exchange traded fund, an investment vehicle with Legal & General, the global insurer, or specifically with LGIM, which is their asset management arm. It's a thematic ETF around brands. It's based on the top 100 brands within our Global 500 study. And LGIM did some analysis to sort of test the strength of the potential of this index prior to launching. And what they found was that from 2016 to 2022, the 100 brands the top 100 brands in our study, or the companies that own the top 100 brands in our study, delivered 23% more shareholder yield, 19% more return on equity, 18% higher profit margin than their mega cap peers from the MSCI world. So again, more evidence that brands deliver business results and are critical business assets that need to be managed and invested carefully in. So this was I know you're going to be much more interested in the South Africa launch, but this was the top 10 from the Global 500. Apple made it to the #1 spot this year. Microsoft leapfrogged Google and Amazon into #2 place. We had a new entrant, which was Deutsche Telekom, into 9th place, and Tesla dropping out of the top 10. The key thing to note, though, is that the concentration of power and value in the top 5 brands. So the top 5 brands alone represent $1.6 trillion of value, and that's 19% of the entire Global 500. And it's this kind of amazing concentration of power into the into the hands of a few incredibly powerful tech companies, all of whom are sort of investing in huge amounts of money in AI, powering forward with those investments, and with the potential implications of those investments for jobs and the economies of the future. That was one of the real big backdrops and talking points of Davos, and the tensions that this is starting to play out. And we thought we could see some of those tensions starting to play out in our own data, actually. So here you can see, Microsoft and Nvidia had huge growth this year. Obviously, both big winners in AI. Other tech, a number of technology-driven sectors like semiconductors and internet and software were all growing heavily, and we could see smaller, but still declines in some of those sectors that are more driven by high street and consumer sentiment, so restaurants, retail, food. So, some of those tensions that we're seeing in societies around the world, and the cost of living crisis, the risks of the potential opportunities, but also risks that AI may pose in the future for jobs, we felt were starting to play out in those numbers. And it's really with that backdrop and in that environment, I think it's the brands who can maintain their trust in times of turbulence and volatility are those that are kind of most likely to thrive. So talking a bit more about trust, we can see a few interesting highlights of examples where erosion of trust has undermined brand value. Tesla is a really good example. Tesla, as I mentioned, dropped out of the top 10 this year with a 12% decline in value. We saw that the overall trust in Tesla fell quite significantly from 1 year to the next. And you're all probably aware of the backdrop of a slightly erratic CEO, should we say, kind of gradually sort of affecting people's perceptions of Tesla. Also, obviously, strong competition coming through as well from brands in China, for example. I think since I presented this in January, I think the picture for Tesla has actually got worse, and that sort of slowly eroding trust in the brand is not helping the business. And sort of to contrast that, we see Microsoft, which is a brand that's built on very solid foundations. Although they are investing huge amounts in AI, they really do have a strong trust underpinning. So huge growth in value this year. We saw our analysis tells us that trust is a key driver of consideration in technology. It's the #1 driver, and Microsoft scores second overall globally amongst tech brands on trust. And we can see that this is really underpinned by the behaviors and internal values and ethos within the company. They've put a lot of effort into AI ethics, a lot of effort into digital safety, and I think all of that is driven from the very top of the organization, with Satya Nadella, ensuring that the business tries to behave and do things in the right way. So a couple of different counterpoints as to how trust and strong trust can really sort of support your brand or undermine your brand. And we've got some other data as well. We looked at all of the brands in the Global 500, and we can see a strong relationship here between trust and consideration. Now, correlation isn't causation, clearly, but there is an undeniably good, clear relationship, I think, here between trust and consideration. For the statisticians among you, the R² is 0.68, which I think is pretty good. And trust is really a fundamental foundation for value creation. If we, for me, this is kind of summarizes the brand value chain I'm going to present now. Sort of summarizes how brands create value. First of all, familiarity. So they help, well, strong brands give customers or consumers utility. They provide value to customers. How do they do that? First of all, through familiarity. So this is the mental availability side of things. It's a brand I've heard of. It's a brand I've seen around. It helps me to reduce my consideration set, saves me time, simplifies my choices. Then performance. The brand, it's going to do what it says. It's not going to let me down, and it's going to reduces my perceived risk. The classic behavioral economics terms, loss aversion. We all feel the pain of loss twice as much as the benefits of success, and so we're all quite looking to avoid risk, and strong brands help us with that. And then the strongest brands can also layer on top that sort of emotional benefit and that appeal, helping you feel good about buying them. That utility value influences behaviors, so it means you consider the brand, then you're more likely to purchase the brand, buy the brand and buy the brand again. You're more likely to pay a premium for the brand. Both of those things have an economic effect in terms of revenue and profit margin. We're more likely to build a franchise of stable and repeat customers that means we have more reliable earnings and lower risk. And all of these things are value drivers. Revenue, profit margin, risk all drive value at the end of the day, whether that's and that applies for the value of your business as well as the value of your brand. So if we believe that's how brands create value, then what's the role of trust? Well, I think we can actually unpack trust into three different things. We've kind of talked about this already, the won't let me down, sort of what I'd call competence. It'll do its job. You don't get fired for hiring IBM or Toyota as a sort of highly reliable car brands, for instance. But there are other elements of trust as well. There's the benevolent side of trust. So this brand's on my side. It's not entirely going to sort of do everything for its own profit motive. But it will look after me as a customer. It will. If something goes wrong, it'll do the right thing. It'll sort of make sure I'm okay as a customer. They're on my side. And the last is integrity. A brand that does the right thing. It's doing the right thing by society, by the environment, by its workforce. And so I think the strongest brands of all, that have the highest levels of trust, are likely to be doing well on all three of these elements of trust. But I'm just going to focus on the integrity, that third pillar of trust now, because of the theme of this talk was about sustainability, and what we've also got data, again from the sort of extensive research that we published that I was referring to earlier, on the relationship between trust and sustainability. Two questions in particular. One is that the brand reduces the negative effect of its operations, and the other that it supports causes that I care about. And again, we can see that there is a clear correlation between those sustainability related metrics and trust for the brand. But again, correlation isn't causation. So we also did what we call drivers analysis, which is more sort of a statistical analysis to show what are the drivers of consideration. So these, on the slide here, you can see apparel, automotive and consumer electronics sectors. We've done this across all sectors, and Ollie and Jeremy would be happy to sort of get into a discussion with you about your own sector at some point, I'm sure. But here what I've done is the green bar is the combined sustainability factor that comprises those two that I mentioned just now, about supports causes and reduces the negative effect of its operations. And we can see that sustainability is now, for consumers, becoming a really significant driver of consideration. Now, this is a global average, and things will vary from country to country and region to region, clearly. But I think, you know, we can clearly see now that sustainability is starting to become a big issue for consumers. And we've also done this analysis in B2B. We run last year we ran a survey among IT decision makers. So companies involved in sort of clients looking for companies to help them with digital transformation. And obviously things like AI leadership and best-in-class talent are rising to the top here. But again, those sort of elements around those ESG factors are increasingly important, particularly important in driving the reputation of those B2B brands, but also important in driving consideration. So, you know, I think sustainability becoming a key factor for both B2B and B2C, and really sort of starting to influence brand equity and reputation, but also the choices that people are making. So, to what extent should businesses be trying to communicate, you know, the investments that they're making in environmental and social causes? I think historically, it's been far from a clear-cut picture. We've seen numerous brands falling foul of, you know, criticism and accusation of greenwashing from H&M, Nike, Allbirds, etc. It's been a sort of, you know, those brands that have put their head above the parapet have sometimes, you know, people are quite happy to try and then shoot them down. And so what we've seen is you know, more green hushing. So companies, rather than putting their head above the parapet and taking that risk of being criticized, just not saying anything at all, but really, you know, for sustainability, for us to sort of make progress on sustainability and do what needs to be done to improve our chances with things like climate change, we need more conversation. We need companies to be out there talking about it. We need to be having a global discourse and changing opinions and behaviours. And how do we build trust without some form of communication? And even the most valuable brands have found this tricky. So, you know, Apple is, as we know, you know, one of the best brand builders in the world. It's got out there ahead of the game quite often, and in terms of the environment, with bold pledges to become carbon neutral. Its latest Apple Watch was 100% carbon neutral. But Apple was then criticized for that as well, because the carbon neutrality of its watch turned out to be reliant on a significant amount of carbon offsetting with schemes that some people found to be of sort of dubious quality. So, you know, consumers don't understand all of these technicalities, and they shouldn't have to. It's kind of up to brands to not mislead consumers and customers. And I think that's where new standards on non-financial reporting, which I'm going to come on to in a moment, should start to play a critical role moving forwards. But we've also seen issues, significant issues around ESG in the investment world. So, you know, a lack of regulation, lack of standardization of ESG ratings, all sorts of measurement systems coming out, but no real standardization, a bit of a wild west. You know, we have companies like BlackRock and Larry Fink and Vanguard coming out credited with sort of mainstreaming ESG investment, but then, you know, even in that world as well, there's been a backlash in terms of job losses, politicization of ESG. I think Larry Fink's come out saying he's kind of wished he'd, you know, he's kind of ashamed of how it's become a politicized thing. And again, I think upcoming regulations on non-financial reporting should bring standardization, reliability, and confidence in the investment world as well. So what we're going to see that's going to coming in this year and should be really helpful in non-financial reporting around sustainability is a shift from a whole on the side, a whole range of independent voluntary frameworks that have all kind of been created ad hoc and separately, through to the right, where driven by the EU, but also IFRS, the International Financial Reporting Standards Organization, are kind of going to be bringing in a much more integrated set of standards that certain kind of companies will then be, need to report on, that will bring more rigor, comparability, and transparency to non-financial reporting. And so I think we're going to see the case for green hushing disappearing as this regulation is adopted by more companies, and there's more transparency and visibility of what people are doing. I think what we're going to see, first of all, is that more and more companies are going to have nowhere to hide in terms of what they're doing, their actions they're taking, and the investments, because it's going to have to be reported on a more comparable basis, and they will be compared with others. So I think we'll see a move to the right-hand side of this slide, with all companies having to take more action. But I think brands should also be more confident to speak up and to start talking more and communicating more about the initiatives that they're undertaking around the environment and other areas of sustainability, because they'll be more confident that they can substantiate their claims and therefore be less vulnerable to criticism of greenwashing. And so I think I'm already starting to see brands bring sustainability more into the heart of their brand strategies, and I think that will continue and gain momentum as these regulations kick in. So thank you very much. I think you're going to have a fascinating panel session next. If you're interested in the panel session that followed my talk here that I just gave, you can also find that on the Brand Finance YouTube channel. But that's it from me. I hope you have a lovely rest of morning and a great rest of the session in person over there.
Thanks for that, Michael. I think we've got a lot to digest already, haven't we? And we're only halfway through. Next, we're going to focus on South Africa. So Ollie Schmitz is going to come up and take us through what's been going on locally. It's been a turbulent year, but it's also been a steady year. But I'm not going to go on, because otherwise I might steal some of his thunder. Ollie.
Excellent. So I feel like I need to explain. I wanted to wear my best shirt this morning, and my wife nearly died when she saw what I came up with. But I'll explain the same thing to you that I explained to her. So in 2013, I was living in a village in Botswana, and a friend named Eunice went to Zambia, where she came from. She brought back this material as a present. And so I took the material to my friend Felix, who was a tailor from Zimbabwe, and he made me this shirt. Now, I have to admit, it's probably not the most fashionable shirt. It doesn't fit very well. In fact, it doesn't even have long sleeves. But it is the best shirt that I own, because it's got a story. And as Sydney and the team from ABSA will tell you, that every story matters. And so this is my best shirt because it was made by an African for an African living in Africa, which is probably why I'll wear the same shirt next year as well. So this morning, although we're here to talk about the headwinds that South African brands are facing, we're also here to recognize our best, to consider some of the stories of the top 10 strongest brands and the top 10 most valuable brands that we have in South Africa. And so thank you very much for joining us this morning. Now, we'll just have to touch on methodology for a second to calculate brand value. The primary approach that we use is the royalty relief methodology. And it assumes that if you don't own your brand, you would have to license it from a third party. And so the approach is based on commercial reality. And we take into account 4 components. We take into account brand risk, brand impact, brand strength, and then financial outlook. So the historic and the forecast performance of the brands that we're evaluating. And the combination of these 4 make brand value. Now, just to touch on risk. So in our valuation, we consider risk, which is effectively discounts the future value of your brand to today's terms. Now, we use equity risk premiums and other financial metrics, but a good diagnostic measure of risk is a country's soft power. Now, soft power is the ability to shape other people's perception of South Africa using things like culture, political value, and policy. And it's important because other stakeholders' perceptions of us as a nation contribute to the level of risk that someone operating in our market will experience. And so we need to ask the question then, what is the state of South Africa's soft power? Well, our highest ranking on soft power was in 2022, where we were ranked 34th. And now in 2024, we've dropped to 43rd. Now, part of the decline that we've seen is because in drivers of business and trade, and specifically drivers relating to creating products and brands that the world loves, we've declined. A driver easy to do business with, we've declined. Future growth potential, we've declined. And so as a nation, also global ratings on South African people and values has declined, specifically when it comes to the quality of being trusted. So link that back to what Mike was just talking about. Now, we're the lowest in the original BRICS nations, and in the extended set, we're ahead of Iran and Ethiopia. So taking the results of soft power and then overlaying that with the actual risk that we include in our brand valuation models, we can see that in the UK, a risk rate might be equivalent to around 8%. In South Africa, we're seeing that rate around 15, 16%, so nearly double, which means that in the UK, if you had 100 Rand, in 5 years' time, it would be worth 68 Rand. That same 100 Rand in South Africa in 5 years' time is only worth 47 Rand. So we're losing 30% of our value just because of the risk. But on the positive side, South Africans, how do we rate our country? Well, we have big love for products and brands from our country, much higher than what the rest of the world thinks. We believe that we are easy to do business with. And you know what? We will always get the business done. And also, we believe that we have future growth potential. And so then the question is, how can our brands and their impact create a greater story for others outside of Africa to understand the things that we do? And so one way that we can do that is by focusing on a brand's strengths. And so why do strong brands matter? Well, when we value a brand, we can consider its overall impact on internal and external stakeholders. For example, this first example over here, our research, it helps us to explain that customer consideration for a brand, for every 1 point increase in consideration, we can value the change in market share and associated revenue, resulting in a stronger brand, a higher share price. And we can prove that impact across strong brands and across different functions in the business, finance costs, share price. And so brand valuation should not be limited to just proving the success of marketing alone, but rather it should be a measure that looks at the overall function of the business. Now, how do we calculate brand strength? Well, we use quantitative research, like Mike explained, and we use a balanced scorecard approach, and we assess the strength of a brand versus its competitors, calculating a score out of 100 in the sector. And so it essentially looks at behavioral elements of the brand, and then we can account for perceptions from customers and from other stakeholders as well. But that was the rushed 2-minute overview of how we calculate brand strength. But what we're here today to do is to recognize, firstly, the top 10 strongest brands in South Africa. And so, ladies and gentlemen, here they are for 2024. disappointing when the sound doesn't always work as well as it should be, but at least we could hear your reactions in between that. So in terms of the strongest brands, let me just plug this back in. F&B moves to the top of the ranking, replacing last year's strongest brand, Pick n Pay, which has dropped to 8th. And so problems in the boardroom are slowly being seen in the brand strength of Pick n Pay. The biggest mover within the top 10, so let me move there, is Old Mutual, from 7th in 2023 to 2nd in 2024. Now, interestingly, the brands included in the top 10 remain in the same, they're the same as last year, just they exchanging places slightly. All of the top 10, with the exception of Old Mutual, have declined in strength. In fact, amongst the top 20 strongest brands in South Africa, only 5 have increased in brand strength over the last year. That's Old Mutual, Outsurance, Mr. Price, Engine, and Castle. But why have all these brands declined? Well, 2 points. The first point is that the respective sectors that these brands are operating in are becoming more competitive. The number of strong brands in these sectors is increasing, which means that we have fewer outright leaders. For example, in banking, F&B and Capitec were previous outright leaders, but now we see TymeBank, Discovery, and Nedbank starting to come up on some of those consumer benchmarking measures. Also, out of those 3 categories that make up brand strength, so investment, equity, and performance, majority of these brands are losing strength when it comes to performance measures. We see analyst ratings on mute, followed by declining performance measures on forecast revenue growth, and then also volume and price premiums. However, because these brands are still performing extremely well when it comes to an investment and equity, we see that these values could bounce back very quickly as soon as the macro environment of South Africa changes. Also, in our top 10, we see retailers dominating, just demonstrating the trust that consumers put in them. And then also worth mentioning that amongst the banking brands, F&B is the 4th most strongest banking brand in the world. Capitec is the 7th. And in terms of insurance, Old Mutual is rated the strongest insurance brand in the world relative to its competitors. So that's an incredible achievement. Just what does it take to make a top 10 brand? Well, in 2016, the average brand strength for the top 10 brands was 77 out of 100. Now the average is 89 points. So that's a remarkable 10 plus BSI point jump since 2016. And that just suggests that South African brands have made significant progress in building brand equity through consistent brand investment and while supporting business performance. And all of this has been done during some of our most challenging times. And here we just see the evolution of F&B from 2020 to 2024. Their brand strength has grown in 3 stages over the last 9 years, and here we see them at first. Now, we've mentioned consideration several times today because it's one of the measures at the heart of our brand equity. And it's something that we can specifically market, and we can specifically model the impact of marketing on consideration. As I mentioned, it's something that we can measure. It's something that we can demonstrate the financial upside. And as consideration increases, we can also start to demonstrate the changes in market share. Now, another way that we use consideration is to demonstrate the impact of sponsorship and marketing campaigns. And for instance, in our research, we can track the consideration of sports fans versus non-fans for a particular brand. Now, our results report for this year has a case study for Standard Chartered Bank and their sponsorship of Liverpool. And we see that we can see the consideration. It's the 3rd bar down amongst soccer fans, 51% versus non-fans, 35%. And so the resulting upside, we see that the sponsorship was calculated, or the benefit was calculated to be 13 billion rand, where the sponsorship itself only costs 3 billion rand. So that's a 4 times multiple on that sponsorship. But what's interesting is that if we look at the underlying drivers of consideration, it's not just the emotional drivers that are changing, but also functional drivers. And when we overlay that with some of our South African brands, we can see interesting trends as well. Sports sponsorship in South Africa is a great way to drive increased brand consideration. And even in some cases, we see the impact of long-term sponsorship even after those partnerships have ceased. So, for instance, 62% of respondents were soccer fans. Their consideration for ABSA is 7% higher than non-fans or than the average market. We also see in rugby, Vodacom, 7% higher consideration, FNB 4%. Cycling, amongst professional cyclists, they have a 34% higher consideration for ABSA than the market in general. And we see some interesting scores coming through now in paddle and other events as well. But that's enough about brand strength. We would like to now focus on the top 10 brand value. And so here we have our top 10 for 2024. Just going to change this. Congratulations to our top 10, and I think there's at least one surprise in there. But let's start from the top. So 46% of brand value in South Africa sits within these top 10 brands. Now, there's been an incredible degree of consistency in the brand value performance of South African brands. So 6 out of the top 10 here have been in the top 10 over the last 9 years. And MTN and Vodacom have been in first and second position. Up until 2021, both MTN and Vodacom were also sitting in the top 10 strongest brand ratings, which supports that principle that strong brands support strong business performance. Now, in 2016, the average brand value across the top 10 was 19 billion rand. In 2024, the average value has risen to 32 billion rand. And so brands like MTN, Vodacom, Standard Bank, and Absa have nearly doubled their brand value since 2016. Now, these brands, they represent anywhere between 12 to 40% of their total business value. Now, just a case study. So with the telco companies, they benefit from a monolithic brand architecture where the value is built into a single brand. But Shoprite, they've taken a different approach, which dilutes brand value across several brands. So if we had to consider the total value of Shoprite's portfolio, the brand value would be 41 billion rand. And if we considered it in that context in our league table, it would place it in number 3, above Standard Bank. The Shoprite brand itself has entered the top 10 for the first time this year, and Checkers is at number 11. And also incredible is that Usave and OK Furniture are the 2 top fastest growing brands in South Africa for 2024, growing at 54% and 43% respectively. Shoprite and Checkers grew at over 28%. But I think we need to just talk a little bit about the chicken in the room. So our breaking news is that Nando's makes it into our rankings for the first time. They come in at number 4. And so we finally found enough financial data for Nando's so we can put them in their place, and it's a fantastic place to be. Well done to Nando's and the team. And Doug, Nando's, it sits between 4 banks, 2 telco giants, 2 retailers, and that makes it even more impressive. And that's also why we've got Doug sitting between Sydney and Mike. And we'll hear from them on the panel a little bit later. But what I personally learned about Nando's, that despite its South African roots, most of its revenue is generated in the UK and Australia. The last annual report we saw, it had 893 stores, but I'm sure it's expanded since then. You may ask, what came first, the chicken or the egg? Well, Nando's tells us it's the people who made the chicken. They come first. They call their team members Nandokas. Is that right? You'll have to correct me there. And in their annual report, they say employees are their most important asset. And we also love that in your headings, they tilted at 87 degrees to remember their roots and the year that they were founded in 1987. And so we can safely say, Nando's, we value you. What an amazing achievement. And we look forward to hearing from Doug and the team shortly. And so on that note, we dedicate this one to Nando's. Thank you very much to colleagues for being here today and for joining us for this presentation. I want to hand back over to Jeremy, and we look forward to hearing from the panel.
Thank you, Ollie. Well, that was the second big course. I hope you've not got indigestion. I often think that this is the sort of presentation we should take outside of the marketing department and give to the rest of the organization. I know over the years I've often been treated a little bit like Daniel and put in the lion's den and asked to speak to the non-marketers. And one of those companies I remember 20 odd years ago was Sasol, and doing a presentation to them and explaining how their most valuable asset was arguably their brand, and the fact that they were all potential ambassadors for their brand, all of them, every employee. And when you look at some of the figures that Ollie has shown, I think some of your colleagues, no matter how how cognizant they are of marketing matters might be sometimes shocked at some of those figures and how important it is. And also when you look at the value of those brands, we're talking billions and billions of rands that are the responsibility of some of the people in this room here. That's a hell of a responsibility. Again, I have an argument with, and I'm going to mention it, the Institute of Directors, of which I've been a fellow for a long time, and I try and talk to them about the main assets of companies. And they say, no, we're all about governance. Governance is our focus. And some of you will know that we bring out the global intangible asset charts and send it along to the Institute of Directors, and they say, no, we're about governance. We're not going to cover this at all. To which I say, well, hang on, if your major asset is your brand, where's the governance there? And then we have silence. Sorry, that's a little bit of a rant, but I wanted to mention it because I think all of us know that sometimes we have colleagues who just don't quite get it. And so this is where we're all about bridging the gap between marketing and finance. At that point, we're going to lighten up, I hope, and have a panel discussion. And can I ask, please, the 3 delegates who are here? Sadly, Nontokozo from Momentum is not feeling too well this morning and has had to back out. But Michael Bosman, would you join us, please, on stage? Michael, some of you will know, is chairman of SPAR. He has an illustrious background in advertising, and so he's crossed over to corporate life. And boy, if anyone has had headwinds in the last 18 months, 2 years, it must be Michael. And then can I ask Sydney Buele to join us? Sydney has been CMO of ABSA for the last 14, 15 months. Before that, he was at Sanlam, and before that at Liberty. And you will know that ABSA has relaunched, repositioned itself in the last couple of months. And Sydney and his team have been doing sterling work there. And the third member, who's been alluded to, Doug Place. Doug, please come and join us. Doug has been CMO of Nando's, I think I'm right in saying Africa, Middle East, and a little bit of Asia.
That's it.
And
Thank you.
at the Marketing Achievement Awards 2 weeks ago, Doug was voted the Marketing Man of the Year and his team. And I have to say he's been chairman of Marketing Association of South Africa, following on from Sydney. So we have a very august panel here. Now I have to ask some questions.
Do it.
We're talking about headwinds, and as we were trying to say earlier, it's not just a negative. Now, Michael, I'm going to lead off with you because when you went into SPAR, I'm sure you had no idea what was coming down the line. And I have to say I had a little bit of an inkling, because anyone who reads Financial Mail would have had an inkling that things were not as they seemed. And in fact, on one morning, I had a phone call from a very, very important firm of attorneys saying they were handling a case between da-da-da-da-da and SPAR, and would I be interested in being involved as an expert witness? And the more I looked at it, I said, no way. So would you like to talk a little bit, because despite the problems of SPAR, despite the problems in the boardroom, as we've heard with people like Pick and Pay, despite that, SPAR as a brand is still incredibly strong and doing very well. Would you like to talk to that?
Sure. Thanks, Jeremy. Look, the SPAR assignment came a bit out of the blue for me. And as you say, like everybody else in this room, I'd been following some of the difficulties that they had, which, of course, as you know, include allegations of racism and disputes with major retailers and black retailers and poor corporate governance. And, of course, all of this was affecting the brand fundamentally. So, as you also know, most of my life I've thoroughly enjoyed being in environments where I can build or fix things. So it was a perfect kind of fit for me in some ways. And I think that all that the board and the executive management team and I did was really just get stuck into prioritizing the key issues that were affecting the business and the brand and the perceptions, and then tackle them, one by one. It sounds pretty basic, but that's what we did. We're very fortunate because, SPAR is a very diverse organization. I think that historically we haven't done a terrifically good job about promoting our brand, despite what you've shown here. I think there's vast improvements that can be made. I mean, we operate in 11 countries, and we have more than 4,500 stores, including Build It and Tops. And we in Ireland, where we have 1,100 stores, we operate a full-blown multi-brand strategy. So to a very large extent, a lot of the good stuff in SPAR had been squashed by, and it often happens like this, as you know, in tough times. So it really was. It was a fantastic assignment. It still is, just to get stuck in there and try and rebuild it. And actually, I've so enjoyed the two presentations this morning from Ollie and Mike, and so much of it resonated with me, because actually I think hard times are actually the times for brands. I mean, if you have a problem in Polokwane with your appendix, and you have a choice between choosing the Polokwane Hospital or Mediclinic or Netcare, you're probably going to go to one of the last two, simply because, you trust and all those things. It's a simple choice. It reduces the risk. It emotionally works for you. You can relate to it. So all of those good things come through. So I think in hard times, this is really the time for brands to shine, and people don't want to take risks, and so they go in places where they can rely on what's there, and they can relate to what the brand offers. And I think therein, is the beauty of what we do on a day-to-day basis. And I often stretch my brain about what kind of other things exist in the world, and are they brands? So is the South African Rand a brand? How about the Catholic Church? I mean, if you want to see a brand that's actually done well in tough times, or the Anglican Church, because it's simple to the presentation, it reduces risk, and it gives you hope for where you're going, and it improves your emotional kind of feeling. So I'll stop.
Thanks for that, Mike. Yes, is it a brand? I think we should have a vote here. Is De Beers a brand? If you think it's a brand, put your hand up, please. And as my colleagues say, but you can't buy a De Beers.
Exactly.
Or you couldn't until recently, but now it's meant to be lasered on. But, this is what is a brand sometimes.
Yeah.
And I think we live in the world where everything is brandable. But I often find that people connect better if you don't use the word brand. In fact, I mentioned the Institute of Directors when Richard Wilkinson was chairman back in about probably the turn of the century. He asked me to write an article for directorship on corporate brands. He said, there's one catch, you can't use the word brand. And I wrote the article, and then I went back and I took out the word brand 32 times. and it was published. He understood brands better than, anyway, I won't go there. Sydney, you have had very interesting times. We're not here to talk soccer, I'm afraid, because I'm sure when you were looking at Liverpool and seeing what was going on there, but you've come through a very interesting time, and I think it's almost the dream of a lot of marketers to be in a position to almost relaunch a great brand, a brand with great heritage and background. But as we know, we've got to keep relevant, we've got to keep up to date. Would you like to expand on that?
Yeah, I've been given an incredible responsibility of a business built on solid foundations over many years. I stand on the shoulders of giants, some of whom are in the room here who are still at ABSA. Some of whom, like the Wingfields of this world, contributed for many years. And it's an organization that's gone through a lot of different horizons. I often ask myself the question, whenever you look at what was presented there for businesses that have been around for a long time, what does it mean to reframe itself, reintroduce itself, or refresh itself, into the modern day, when it's gone through so much, from the days of the four banks being amalgamated into something that's meant to be unified and to represent something that is tangible, to a time when you have an international player, Barclays, comes in, They put their own footprint into the shape and form of the organization. And at some point, they extricate themselves, and we've been on that journey now for 6 years since Barclays left our shores. We've taken the rest of the operations across the continent that they used to own, and we've rebranded those Absa. And it felt like the opportune time in this horizon to say, what is the existential question? Who are we as an organization? You're competing with neobanks, you're competing with new players coming into the market who were born probably a decade, 2 decades, 3 decades ago, and you've been around forever. So you're sitting on a lot of residual perceptions and probably schizophrenic because you've gone through just so many multivariate changes. So the last 5 years, I guess, have given us an opportunity to look at ourselves and say, what does it mean to be truly Pan-African? What does it mean to be truly South African, to be truly Zambian, and leverage the universal, insights of humanity, to be relevant to what people are expecting today. And that's been the journey over the last year. So I started at the beginning of 2023, and we've gone through the journey of reframing that. And of course, when you do that, you don't throw away the baby with the bathwater. You take some of what has worked, but also you say, what does it mean to be a brand that's relevant into the future? You put both of that into the washing machine in terms of relevance and the things that make you matter in people's lives. And you try bring meaning to it, because ultimately people interface with organs that they can relate to. We are a people business. I know we are categorized as financial services, but we're a people business. We deliver propositions through people, and therefore we spend some time to kind of make sense of that. And we believe that where we've landed is a space that is not replicable, is representative of who we are as an organization. It's authentic. That's what Absa is. It's not the most beautiful words that you can craft and put together. It has meaning into the veins of the organization. We can trace, when we say your story matters, we can somewhat trace that into what we've represented and what we want to represent. Of course, we can improve on it from time to time to demonstrate that promise and to make sure that the trust that was spoken of this morning connects to the promise. So yeah, it's been an interesting journey, exciting, and anecdotal evidence so far is that people, both internally and externally, are excited by the space we've landed. The rubber will hit the road, of course, as we review the brand delivery, so that it's not just a marketing campaign. It's how people experience us as an organization. I was at pains when we launched it internally. Over 25,000 of our colleagues who joined at that launch. I was at pains to explain that this is not a marketing campaign, that this is a business transformation exercise, and that its success is highly dependent on our colleagues, 40,000 of them, playing their role, skin in the game, into that promise. So, and I think we are getting to a point where our people understand the responsibility that they have, so that is not something that is championed in the marketing department, that it's championed across the organization. So we're excited by by the prospects of what it will bring to society, to families, to individuals, to organizations small and big that are, looking for hope and partners to take them to the next trajectory of their growth.
A lot to think about there. Thank you, Sydney. Yes, some people still think that the brand is the prisoner of the marketing department. I was mentioning to a colleague here from Telkom earlier today that I worked with Telkom a quarter of a century ago, and we were working with the comms department. And it was the time when Telkom had linked up with the Americans, and the marketing department was headed up by an American. And we were not allowed to talk to the marketing department because our contract was with the comms department. And it was headed up by a lady called Amanda Singleton. And then there was a lady who later on became, in fact, head of marketing here, Ziona Majabe, and she was the number 2 there. And eventually, after about 2 years, we were allowed to go into marketing because they kept all the research. To which, when I walked in, the head of marketing, as I say, a very large American gentleman, said, "Oh, you're one of Amanda's boys." And that was the insult I felt to comms from marketing. And this is where all organizations, it's like a sports team. Everyone is important. Everyone has to work together. If you have someone who's an oddball in a team, you throw them out often because you've got to work as a team. And this is where any organization today can't afford to have not total alignment of the entire organization, as Sydney is saying. Doug, you've got a fascinating brand. I think if we were to ask a lot of people in this room, what brand would they love to work on? Nando's would be pretty high up the scale. But you've got an interesting role as well, because here is a South African brand. And I find speaking to colleagues in the UK, they don't often realize it's South African, nor do they care. Sure. They just love Nando's. So tell us about your Headwinds.
Yeah, fantastic. Thank you. And what a platform and opportunity. And this is a massively intimidating audience, let me tell you. I'm sitting in front of many of my teachers, and among them as well. Nando's, it's bizarre to be at the JSE in many ways, because we're privately, we have fewer shareholders than are on the stage. And patient capital is a very, very real thing for us. And part of the benefits of that is you can have a very thoughtful approach to brand building and managing and curating your brand rather than being at the mercy of sort of quarterly reporting. So that's a major beneficiary. And I think it was Jeff Bezos who said, in the long term, the interests of shareholders and customers are the same thing. And I think the distractions that brands have often come from financial markets, as opposed to driving and building a wonderful thing for consumers. And that's what Nando's has set out to do. So I want to touch on your question, which is we are a South African brand in almost 20 countries around the world, more if you count our condiments and sauces, but our restaurants are present in over 20 countries around the world. It's been as high as 35, so we haven't always got it right. We've been in and out of some markets as much as 3 times. We just re-entered Kuwait 2 weeks ago, and that's going very well, touch wood. So to a degree, it's a very successful brand, but its South Africanness and is very much an interior thing. So we don't play the national anthem or have the flag in any of our stores. But what we want to export is the best parts of South Africa. We have the best constitution in the world. And the foundation of the South African Constitution is very similar to our employee value proposition. This is, something which recognizes that diversity is a strength. It's not a virtue; it's a strength. It makes businesses better. More diverse teams are better performing teams. This is a statistical fact, and often it's presented as a moral imperative, and it's that too. I don't want to discredit that. So when we show up in other parts of the world, we are proudly showing up as South Africans, as someone who's different, rather than trying to act like a local. Part of being South African is to be disproportionately confident in your abilities, because for the longest time we punched above our weight, and when it comes to Rugby World Cups, we still believe that's the case. And so, our approach to, the American election in 2020 was to present, with the undemocratic meal. You can look this up on YouTube, which was, we understand just how important voting is, particularly for young people in shaping the future of the world that we all want to live in. And so you should care about it. And so the South Africanness of Ubuntu, but not in a way that's sentimental or seen from a almost a tourist perspective. It's something that's very real. And great brands are tangible. They're things you can feel, they're hopefully things you can taste, they're things you can hear and sense, as opposed to things which are philosophical, which look better on PowerPoint than they do in real life most of the time. Is something that we are just genuinely obsessed with creating. And so when you said that most people want to work for Nando's, that's true. In fact, half of the marketing spend I oversee, which is never enough because I'm a marketer, is spent internally. It's spent on things that you wouldn't see, because we want people to love Nando's as much as we want consumers to love the Nando's experience. And when I just joined Nando's, we have two founders, and they are yin and yang. They couldn't be more different, which is why I think it works. Again, diversity. We have Robbie Brosen, who is, fire and passion and enthusiasm and the biggest supporter of South Africa. I mean, probably after Nelson Mandela, but he's definitely a close number 2. And you have Fernando Duarte, who is, was more interested in making sure the kitchen worked well and the supply chain's effective and you manage the margins of your products. And you need both of those to run a successful business. And I asked Fernando when I just joined at Nando's, which doesn't feel that long ago, I said, what is your experience of the greatest marketing Nando's had ever done? And I expect what most people expected to tell me, which is there was an ad campaign or a moment or a thing that hit the headlines. And he said, I'll never, ever forget this. He said, at some point, I think it was in the mid-90s, the business wasn't doing particularly well, and there was some distress. And so they had value engineered the product, the chicken and the basting, to take some cost out of it, to help manage margins slightly differently. And the consumer experience was worse off as a result of this. And it was terrible, frankly, in his words. And so he tasted the product, and the first thing is we phoned the marketing director, who's now our global brand director, Paul Appleton. Said, Paulie, I need you to stop all marketing, stop all advertising right now. I don't care what costs you incur from cancellation and media fees. We cannot advertise a terrible experience. And so in Fernando's mind, the best example of marketing was to not advertise a terrible experience, because it was going to be far more difficult to get people to come back after they've had a bad product experience. And so, understanding marketing holding the brand hostage is a real thing. You understand that there are 14,000 people in my marketing team. They work at restaurants all over the 12, 13 countries. The best ads I can make, and I try and make great ones, don't fix a bad product experience. They just can't. And in fact, some of the challenges we've had is the experience of the brand in advertising has not been the experience you have in a store, and being able to kind of reconcile those two things. And that hasn't always pleased the advertising community, because they want you to make Last Dictator 2, right? And what really pleases the communities which you serve is a great and wonderful South African chicken restaurant experience. And so being able to kind of put those two things together, and understanding that fundamentally the brand is what the consumer and what your employee experience, and less about trophies from award shows. When we love those, believe me, I love those, is critical to developing the value of the brand long term.
Wow. You reminded me of one of the best lunches I've ever had.
Easy.
And it was the company.
Mm-hmm.
The meal wasn't that memorable, but it was okay. But it was the company with a certain Robbie Brosen and Fernando, where Robbie lived just around the corner from where I am. And I have to say, sometimes going out early in the morning, and there's Robbie running down the road. I said, "What the hell are you doing?" He said, "I'm doing Comrades."
Yeah.
And just such a quiet, humble man. Mike.
I was just going to say, just hearing the story here from Doug now just shows you again the power of perhaps the organization when you have few shareholders, and having the courage and the freedom to make decisions quickly in an agile fashion. And because of one thing we can all say about Nando's, and we were chatting about it a bit earlier, is how authentic they are as a brand, the follow through. And I think that sometimes in the corporate structures, we've lost that. And I think that that is a big opportunity. And I'm very encouraged because in recent times, I am starting to see people with marketing backgrounds being appointed as non-executive directors. And I'm already starting to see the impact of those people. And many of them are sitting on the boards of those companies that you showed here this morning. And actually, when I looked at those this morning, I didn't think that there was anybody there that was having a free ride in terms of sailing downwind, to use your, I mean, everybody there is fighting serious headwinds at the moment. I mean, the two top brands there this morning in terms of value of MTN and Vodacom with more than 105 odd billion rands worth of value. And I mean, just think of the regulatory frameworks that they're operating in, and what you're facing there on a day-to-day basis with at MTN, for example, we have, you have problems with base stations. If you don't have powered base stations, your network goes down. So you put batteries in, all right? So then what happens is your batteries get stolen, is then you put a fence around it. That's no problem because you steal the fence and the batteries, so and then so every one of those every one of those brands are doing incredibly well despite amazing headwinds, in my view. And well done, Doug. I think you've done a terrific job.
This MTN I find fascinating because you think that they're operating in Afghanistan, Yemen, Iran,
Nigeria,
Syria, Nigeria, where the currency's gone down 30% in the last 12 months or so.
It's worth 30%.
I've been in Damascus and I've been in Tehran for MTN. Would I go today? No.
Exactly.
But here is a company, a South African company, that is still operating and making things happen. We're running a bit out of time, but I want to ask one more question, because when you've got three gentlemen like this on stage, you're not going to let them go easily. Sydney, you saw my last question. What keeps you awake at night? That's the consultant's question, I know, but you're responsible for so much, so many people, a relaunch. You've got your entire exco saying, how are you doing? What's marketing up to?
It has to be attribution, cause and effect. Why we're doing this, for what purpose? Because that defines resource allocation. That defines how we measure success. That defines how we build credibility into the business so that they can see value in the marketing function and its contribution to business. It takes conversations out of the marketing department into the boardroom. Next week, we have a quarterly business review. And then a week later, which is an exco conversation. And a week later, we've got a board, the ABSA board, that I'm presenting there. In the presentations that I'm doing next week and the week after, I'm hardly, like what you were saying earlier, I don't think there's a word brand or marketing in those slides. It's talking about how, in the fabric of the organization, we craft what matters in how we go to market in a way that's meaningful, that connects us in a relevant manner to clients. So attribution, I think, is probably the biggest thing in my mind. We've spoken about measurement in the marketing discipline. And when I was the chairman of the Marketing Association, that was one of the things that we spent a lot of time on. But I don't think we've gotten to the science of it as an industry, as a discipline, as best as we can, particularly in organizations that were not previously marketing driven. If you compare that to FMCG, for example, whose lens often has a marketing orientation. So attribution is the biggest thing for me, because it actually gives us the legitimacy to own the space, to lead in terms of where we we think growth will come from for the business.
I find it fascinating when you look out at this audience, a lot of you in top positions, but where did you start? And I know there's one gentleman out here who I recall started at Colgate, and he ended up as marketing director of one of the top banks. There's another gentleman here from Reckitt and Colburn, who I think he did the same thing. And I find this is where for a long time, also people thought of marketing as purely external. And as you've said, so much of it is internal. It's how you deal with your colleagues, your staff, and getting them aligned. Doug, I'm going to say to you...
And I just want to add, Jeremy, I think what it means, because there's the so what here, what it means is that we need marketing people who are more technical, that we need to make friends with technology and data, because it is through that you're able to craft modern methodologies that are able to demonstrate that. So essentially, I cut my teeth when these things that we see today were not there, when the cell phone potentially was still in a very nascent growth phase. Here we are today, it's the epicenter of how people transact. And what does it mean to evolve ourselves as marketing people, to be able to not just make our brands relevant to customers, but make ourselves relevant to the boardroom?
Absolutely. There's a guy called Peter Stringham, who was the first ever HSBC marketing director in London. And I think he was from Canada originally, and when he took up his role, he wrote a short article on his first 90 days at HSBC, and he said the first board meeting he went into, sat down with his colleagues, there were 20 gentlemen there, and there happened to be, when he walked in, 2 gaps, so he just chose one gap and sat down. And the guy next to him said, "Oh, you're new, hello, my name's so-and-so, who are you?" And he said, "I'm so-and-so, I'm in charge of marketing." To which the gentleman looked at him and said, "Oh, you're running the paste-up department, are you?" And that was in about 1997. And that's when he said he realized for the first time his first job was to marketing to the rest of the organization. Doug, we have so many things to talk about. We were going to talk about ESG and things like that. Would you like to briefly just talk about what you're doing at Nando's in that sort of area?
Yeah, certainly. Well, we're being very compelled by our government to move to renewable energy because of the availability of coal-powered electricity. But yeah, we are very definitely committed to carbon neutrality, and I think a large portion of that is a moral case, and because again, a lot of what we're seeing is the moral case alone is it's great for a press release, but you have kind of this instant decay, and then you have a credibility crisis that follows shortly after because you haven't followed through on lofty statements. So from a Nando's perspective, things like diversity matters, and therefore diversity and inclusion is a performative injunction because diverse restaurant teams outperform non-diverse restaurant teams. Similarly, management teams. This is a source of competitive advantage, not just reporting on an ESG goal. So that would be my encouragement: is to find the commercial value as well as this, the ESG value that sits in on top of that. The challenge from a brand marketing perspective, and you can think of this almost like a matrix, like a 2x2 matrix, and you've got heaven at the top and hell at the bottom. It's the traditional view, and then you have things which are communal and things which are singular. Where you have hell where everyone tend to be industries where there are known felons and everyone's doing quite a bad job. This used to be the motor industry. I don't know if it still is, but carbon emissions and lying about fuel things tend to happen there. Where you have hell that's singular tends to be reputational management, crisis comms, Clicks, H&M, those kinds of stories. But if you imagine heaven for a second, because a lot of companies, because of their predisposition to manage risk, have will manage the hell of the industry by trying to be best of a bad bunch, and then have reputation management interventions to avoid singular events. But when you get to heaven, it gets a lot more complicated because there's the heaven where everyone's trying to participate, everyone's trying to cut carbon. Everyone's trying to manage plastic. Everyone's trying to manage DEI. And it's very hard to stand out as a brand within that. And so consumers see you have to do that. That's just particularly young people. And that's one of the things that keep me up at night is young people, particularly young South African people, 2/3 of whom are unemployed. And are going to have a worse standard of living than their parents. And their parents had a famously terrible life experience, is frankly unforgivable for everyone, not just the government. And we need to address that urgently and now. Is that they'll look at the lofty statements you make and won't separate you from anyone else. All banks will look the same, all restaurant companies will look the same, all motor companies will look the same. The real opportunity is how do you stand out by doing good? And there are very few companies who go to heaven in ways that further their brand uniquely. And so I was really inspired by this morning's presentation, but the big thing at the back of my mind is who's uniquely driving sustainability in a brand advantaged way, not just in a risk-averse way.
Wow. Time has run away from us. I'm sorry, gentlemen. I think we said this could have been a half-day session. So I think we're going to stop at that point. Thank you all very, very much. Mike, you want a last word?
If I may, just to say, Jeremy, that on behalf of all of us here, I don't think that we say thank you and well done to you enough. And I'm just scared that we may not have that chance this morning. But I think what you, Ollie, and the teams do is hugely valuable for all of us. And putting things together like this today is critical for the business and the marketing industry in South Africa. And so well done to you and your teams. And thank you on behalf of all of us.
Thank you very much. Thank you, Michael. Right, we're going to end there, but we're not going to. If you take your seat. That was unexpected. Thank you, Mike. We have one more session. Some of you will remember that last year in the panel discussion, we had Dr. Sizikela Maritle, and I hope I pronounced that right. And having a coffee with her at Gibbs, because she spends a lot of time there now lecturing, just before Christmas, we said, no, we're going to do this, and would you like to be on the panel? And you were great last year. And she said, no, can I have the last word? So where are you? I can't see. If you'd like to come up, because we're giving the lady the last word. She's going to do a wrap. She's going to do a takeaway. And the good doctor, you're going to stand there or come here. Sizikela Maritle, thank you.
Mike, thank you for thanking him, because then I can slap him afterwards. But that is not what I said. But maybe just to echo what Mike was saying about creating space for dialogue that shifts our imagination as practitioners in the marketplace, because many of us can continue to take a clubbering where marketing is considered a cost center, and you speak until you're hoarse in the mouth, trying to make people understand that the brand is the business. The minute we start separating things like brand marketing sits over there and the business sits over there, then we actually score our own goals. What was really, really incredible about some of the comments that were made this morning, I just jotted down some thoughts, which are the takeaways I offered to bring to you, Jeremy. So the first one is around how, for as long as we speak about customer centricity, we are also still just focusing on the transactional component of how people buy and why people buy. Young people today that Doug referred to are insisting that we migrate to a conversation around human centricity, because who am I when I'm not buying? Who am I when I'm not consuming, right? I am human. So my dreams form the story that you say matters. How then do you as a brand invest in that dream outside of our transactional relationship? So there's an underlying challenge here for us to start migrating ever so slowly from consumer centricity to human centricity. There's a second piece that the panel also challenged us on, which is this idea of, I think Doug said, how might you do good beyond the compliance requirement? So if ESG is a conversation that's happening in the marketplace, we as marketing practitioners are responsible for that S. So don't walk away from dialogue because there's somebody who's called a transformational, societal, economic, environmental, ndondoni.com. Be in the room because you are responsible for that S. And to the extent that you can demonstrate by being technical, to Sydney's point, then you're speaking in complete sentences. You're not only showing up to talk about balloons, because this is what some people think marketing does, right? Just the pink balloons and the yellow balloons. Another thing that came out, I think, is what Mike was saying about how hard times are good times for brands. We shouldn't be shying away from the difficult stuff. In fact, that's when you enter the boardroom and you say, how might we, as the marketing community, be part of the design of the solution? Not somebody sits and designs the strategy and an email comes down from the 6th floor to the 4th floor saying, thou shalt do this. So there was something quite important there about how do you write your brand story into a recovery or reframing if you're a legacy business. The conversation around value engineering, trust Doug to give you new terminology, is linked to how at times when we feel that we're being left behind by our peers, all of whom who are in heaven and they're speaking all these very fancy Woolworths water English, we also start making claims that create a credibility gap, right, between this that I say I will offer you and that which I'm able or unable to do. The ultimate test is in the experience because no great ad can fix a horrible brand experience. But in summation, do I have any hopes for the marketing community? Of course I do, because without marketing, there are no businesses. But more importantly, I think, Mike, your voice may be a voice that becomes the champion for the marketers in this room, that if businesses are in business to sell products, services, zips, mattresses, and beanies, why would you not have a marketer in the boardroom? Because for you to have meaning and resonance in society, you need to find those people who are part of society. Sometimes you call them consumers. We are now calling them humans. So there's ample opportunity, I think, for marketing practitioners and brand owners and brand advisors to stop playing small. So don't leave the room when the actuarial scientist starts saying derivatives and x of the power of 2. You see, I'm an actress. Stay in the room. And your slides can't be yellow and green. They can't. They can't be pretty. They have to do the bits, which is what does it take for a business to succeed? So I think the journey around sustainability, we have a role to play, because as long as we remember that sustainability is about the S, then all of us will be on to a good thing. I thank you for your attention, and I wish all of you much success. Thank you, Jeremy.
Well, that is it, folks. I can say again, thank you all for coming, especially on a difficult morning like this. Thank you, Vuyo, again, and the JSE for hosting us. This session has been recorded, so that will be available probably in about a week's time to be sent out to you. But also, all the results are in a brochure, which will be sent to you all as well electronically. In fact, you should get it before lunchtime. I don't know if Amanda's in the room, but if you don't get it, you can speak to Amanda, but it will come through to you. So thank you all again. Please join us outside, coffee, nibbles, and some more networking. Thank you again.